You pay your premiums, you stay active, and you successfully avoid the doctor all year. In almost any other area of life, you'd be rewarded for that efficiency. But with traditional health insurance, the safety net you paid for simply fades away. If you have a standard Medicare Advantage plan and you manage your health well, the value of that coverage zeroes out on December 31st. You don't get to keep the benefits you didn't use. This is a model where your good health yields a financial dividend. That is the logic behind the Phoenix Health Group Medical Savings Account. It's a hybrid financial vehicle designed to capture the healthcare dollars you would normally leave on the table. If you are familiar with a health savings account, or HSA, an MSA is the closest equivalent. The main difference is that an MSA is built specifically for the Medicare space. This structure creates a pathway to keep the funds you don't spend, turning unused benefits into a personal asset. Let's look at how the funding works. In an MSA, the money doesn't come from your pocket, and it doesn't come from your employer. It comes directly from Medicare. Phoenix takes those Medicare funds and deposits a lump sum, ranging from $2,400 to $24,000, depending on your tier, right into a special bank account. High deductible plans can sound intimidating, but the math here is protective. Your true out-of-pocket maximum is the deductible minus the deposit Phoenix just gave you. If you need care, you pay for covered Medicare services using those deposited funds to reach your deductible. Once hit, Phoenix covers 100% of additional approved costs. There is also a secondary layer of protection. For bills under your deductible, Phoenix actually pays your provider directly for the full Medicare allowed amount. You don't have to hand over cash at the doctor's office. You simply repay Phoenix on a flexible timeline. You get a front-loaded deposit and a hard ceiling on your out-of-pocket costs, protecting your downside financial risk while utilizing Medicare's own money. But what happens to that initial deposit if you stay healthy and don't spend it all by December 31st? In a traditional plan, you lose it. Here, the remaining money rolls over. It is yours to keep year after year. This diagram outlines the three-pillar tax advantage. First, the money placed into your MSA bank account is deposited completely tax-free. Second, those funds grow tax-free. You can actively invest your MSA balance through Phoenix's banking partners, multiplying your wealth over time. Third, when you eventually withdraw that money to pay for qualified medical expenses, those withdrawals are also completely tax-free. Every healthy year compounds your healthcare wealth. You are converting idle safety net funds into a long-term tax-sheltered investment portfolio. The standard healthcare system expects you to be a passive consumer. The MSA is built for a different kind of person, the proactive, smart care seeker. This model works best for individuals who have 3 or fewer well-managed chronic conditions, minimal inpatient hospital needs, and low spending on Part B prescription drugs. For these individuals, the MSA takes their proactive approach to wellness and leverages it into tangible, independent financial security. And building that security doesn't limit your medical options. The Phoenix MSA has no network restrictions. You can see any Medicare participating provider across the entire United States without ever needing a referral. For those who stay ahead of their healthcare needs, the MSA captures the capital that usually disappears, allowing it to grow over time. Evaluate your own healthcare spending habits and explore the Phoenix Health Group MSA plans to see if they fit your wealth building strategy.